Welcome to the Fear and Greed Business News Afternoon Report for Monday, the 13th of May, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed flat at 7,750 points with trading in a very narrow range. Consumer discretionary stocks did best, while consumer staples also outperformed. Energy and tech stocks were among the worst performers. Among the large caps, the Commonwealth Bank, Wesfarmers, Woolies and WiseTech Global all finished up 1%. Woodside and Rio Tinto both closed down 1%. ANZ and Macquarie Group both went ex-dividend, falling 3% and 1.6% respectively. In corporate news, construction group Fletcher Building was the biggest laggard after cutting earnings guidance for fiscal 2024 due to a notable slowdown in house sales in New Zealand and a weaker Australian property market. It was also hit by a court judgment of no substantive findings in its claims against subcontractors' work that allegedly caused significant fire-related damages. Fletcher's share price by the end of all that closed down almost 11% today. And lithium explorer AVZ Minerals delisted from the ASX today, 2 years after its shares were suspended. The company's been in dispute for control of the world's largest hard rock lithium deposit in Africa. It had more than 21,000 shareholders with paper wealth of $2.8 billion. Who knows what happens to that now? Story number 2, property giant Lendlease said it's been hit with a $112 million tax bill after a whistleblower alleged it is double dipping on tax benefits for its retirement living business. Lendlease said it had been issued with a statement of audit position and an amended tax assessment relating to an audit of the partial sale of the retirement living business in 2018. It relates to the 25% sale of the retirement living trust for about $450 million to Dutch pension fund APG. Now, yesterday, Lendlease said it's confident of its position and will dispute the amended assessment, adding that further sales of that asset hadn't attracted amended assessments. This has been an ongoing issue for the group, with a former external tax advisor turned whistleblower, Anthony Watson, alleging Lendlease is still underreporting potential tax liabilities. If so, there is a big fine on the way, though that still has to be proved, of course. Lendlease's share price closed down 3.5% today. Story number 3, ARN Media is scrambling to revive its attempt to buy rival Southern Cross Austereo after its partner, private equity group Anchorage Capital, pulled out of the deal. ARN today said an indicative proposal was on the way for the company to buy the same radio stations and brands from Southern Cross as under the previous deal, and also take digital audio assets in exchange for shares. Chair Hamish McClellan said a deal would deliver a business of scale necessary to compete against global platforms. Southern Cross wasn't so fussed about the idea because it said it meant shareholders would end up with interests in 2 competing media businesses, one of which would be subscale. It would also reduce Southern Cross Austereo's exposure to digital media. Under the original deal, ARN would have taken Southern Cross's KISS and Triple M radio stations, along with dozens of regional stations, while Anchorage Capital would have received a smaller number of stations in the Southern Cross regional TV network. Story number 4, the corporate regulator is investigating ANZ over its execution of a long-term Australian government bond issued last year. The Big Four bank said it had been appointed by the Australian Office of Financial Management to act as a risk manager in relation to the issuance of a 10-year Treasury bond back in 2023. That trade is now subject to a formal investigation, with ASIC investigating suspected contraventions of the ASIC and Corporations Act. ANZ said it's cooperating fully with the corporate watchdog. And story number 5, President Joe Biden will quadruple tariffs on Chinese electric vehicles and sharply increase levies for other key industries this week, framing the measures as a defense of American workers. Of course, it's also an election year. Biden will add or hike tariffs in the targeted sectors after nearly 2 years of review, according to Bloomberg. The total tariff on Chinese EVs, for example, will rise to 102.5%. from 27.5%. Other tariffs will double or triple. The administration has spent recent weeks finalising the measures, including which items to hit and which to avoid, because the inputs are needed to fuel American growth. For example, some items used in the US solar industry will be excluded. Biden's plan for more tariffs is mostly symbolic, as China doesn't rely on US consumers in those targeted sectors. Chinese EVs, for example, were locked out of the US market years ago by existing tariffs. However, it does make Joe Biden look tough on China, and maybe that's good in an election year in the US. That's it for the afternoon report for Monday, the 13th of May, 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X, TikTok, and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.